Okay, I think let's start because maybe some other people may join in
Okay,
sometime as well.
that's
Yeah.
fine. Okay.
Welcome everyone. So we are here for this session. I welcome Dr. Roychoudhury. Uh, Thank you, sir, for joining us today. Uh, so let me give a brief intro and then I will hand it over to Dr. Roychoudhury.
Okay.
Uh, So Dr. Saurav Roychoudhury is a professor of finance and economics at Capital University. He earned his PhD in economics. Can we all have our audio in mute, please? That will help. Thank you. He's a professor of finance and economics at Capital University. He earned his PhD in economics with specialization in finance from the College of Business and Economics at West Virginia University in 2006. Prior to that, he worked at the Industrial Investment Bank of India and as a research officer in the Department of Economic Analysis and Policy at the Reserve Bank of India. He earned a master's degree in economics from the prestigious Jawaharlal Nehru University in India. His expertise is in corporate finance, governance, data analytics, investments, and risk management. We welcome you, sir, and please take it over.
Thank you. Thanks again, and good evening, everybody. And thank you for inviting me to this webinar on some thoughts on post-COVID economic recovery in the US and India. Uh, I hope all of your listeners are keeping safe and healthy and not losing their mind over this crisis. Uh, it'll be a brief presentation, and I would like to be more interactive. So, I will spend some time on giving my thoughts, and then I'll just open it up for any question and answers. So it was just in February and even early March, right, when we were still watching India play New Zealand, Liverpool having an amazing season in English Premier League, and I was busy planning my regular summer trip to India. And most governments around the world thought that this coronavirus thing is not a big deal. But within just a matter of weeks, they had to declare a state of emergency. Most countries had to. So this COVID-19 crisis is something unprecedented. I haven't seen anything like this in my lifetime, and most people haven't. And the scary thing is, even after 5 months, there are so many things we still do not know about this virus and the crisis, let alone coming up with a therapeutic drug or a vaccine. So what do we mean by economic recovery? And for that, I have to define what we measure economy by. And here I'm just going by the age-old definition of economy, size of economy and economic growth. So I'll go by GDP. So basically that gives the bragging rights to the country which have the largest economy. So US is number one, China number two, India is fifth, but if you include purchasing power parity, we are actually number three. So that's great. So what's GDP? So GDP, if you have studied in Econ 101, it's the sum of all final expenses or total economic output by an economy within a specific period, usually January to December. And the four major components to calculate GDP are this consumption, which is given by C. And this is a very familiar equation. And when I studied economics, and some of you who have studied economics here are very familiar with this equation. And so consumption expenditure, investment, private investment, and government expenditure. Plus we have a section which is exports minus imports, right? So just to give a perspective, I'm comparing both economies, the US and India. So for the US, 70% of the GDP comes from consumption sector, from the consumption, not the consumption sector, but consumption. About 13% comes from investment. In contrast, India, about 60% of it is from consumption. Investments is about 29%. The government expenditure in India is about 12% of GDP, and in the US, it's about 20%. India has a small trade compared to this GDP. It's about negative 1.8%, so it kind of gets sums out of GDP. For US, it's bigger. It was about 5% about 5-6 years back, but it's now about 3 and 3.5% negative. So both countries maintain a budget deficit. Size of the economy, and it's not on purchasing power basis. It's 21.4 trillion for US, and India, it's about 2.71 trillion. So just have those numbers in perspective. Uh, so personal consumption includes durable goods like cars, furniture, large appliances, and non-durable goods like clothing, food, fuel. It also includes the services, a lot of the service sector like banking, healthcare, education, iLEAD, right? Uh, the business environment investment includes purchases that the companies make to produce consumer goods. That includes new plant, property, equipment. We call it NPPEM, and any commercial real estate and materials, as well as investments in inventory, right? So in accounting, those inventory, procuring of WIP, raw materials are all counted. And then we have the government spending, which include the central or federal government. In US, we call it federal government. In India, we call it central. They're basically the same. And these expenses are in defense, state, and local government spending. So if you look at the service sector, I haven't put the graph here yet. And service sector is most affected by the coronavirus, by the COVID-19. And in the US, the service sector is about 77% of the economy. And in India, it's about 55%. The industry sector, the manufacturing industry sector in the US is about 18%. In India, it's about 30%. And agriculture and allied services, which is the least affected, is about 5% in the US. And in India, about 16%. So we do have a good start in that sense that though the service sector is most affected in India, service sector is still the largest, but not as high as the US. So let's look at what the growth paths look like on average for the Indian and the US economy before the COVID crisis stuck. So basically, what was the potential GDP or this Y? Okay, so let's look at it. So U.S. economy, it was doing well before this stuck. We had the lowest unemployment rate for like 30 or 40 years. We were having a growth rate of between 2 and 3%, which seems to be pretty decent for a size of economy like $21.4 trillion, right? For the Indian economy, its growth rate, of course, is higher. It's a smaller economy. It's more room to grow. But it was growing at 7% 2-3 years back, but now it's pegged down to between 4.5% to 6%. But still, it's a decent rate, 4.5% to 6.5%. It's more than most of the countries in the world. But then it stuck. The COVID stuck and came, and most of the countries were unprepared. By the way, for the purchasing power basis, if you translate this $2.71 trillion, this will be about $10 trillion, which will make it the third largest economy in the world. Okay. So now let's look at the various scenarios that might unfold. So the topic of this conversation is what does the economic recovery look like? So let's look at the first one, which everybody thought would happen, but now seems increasingly unlikely. So this is the V-shaped recovery. And basically here, the economy loses production that would have occurred in absence of pandemic, but very quickly returns to the pre-pandemic baseline once the social distancing is lifted. So we have a sharp drop. Like in the US, there is a drop in 5% in the first quarter. In the second quarter, they're expecting a much sharper drop. But if V-shaped recovery is followed, then we'll have a sharp uptick in the economic growth and be back to where it was. And this should be by the end, like in September, October, that was the prediction. But it seems that we are not in route for it. But these things can change if we have a kind of a therapeutic drug which prevents people who are having corona or a very quick vaccine, which seems very unlikely, we may actually see a V-shaped recovery. But now it seems very implausible. So in this scenario, a good part of the GDP is foregone under this lockdown. The travel we didn't do, the restaurants we didn't dine in, the cars we didn't buy, the Uber we didn't ride, the house we didn't purchase. So some was foregone and would never be repeated, and some were delayed. But assumption is one's life returns to normalcy and there will be some pent up demand. Everything is just as it would have been before, right? Uh, so the next one is, I think, more likely, and that's the U-shaped recovery. So the effects of this pandemic on economic activity would last beyond the end of social distancing, and the GDP recovers slowly. And even after the health risks recede, because of the fear of going out, venturing out, the economy still doesn't quickly go back to where it would have been, though it does go there eventually, but it might take time. So early next year. But as I said, many consumers, businesses, and state and local governments are still hesitant to spend, and it takes a while for the economy to get back to its pre-pandemic trajectory. But one of the thing is, a lot of the unemployment, at least in the US, is temporary. So they say 80% of the unemployment, which is generated due to the COVID, is temporary. And one of the reason is, and I'll talk about that later, is US is giving a very generous unemployment benefit to the workers. And I'll talk about the size of that later, but it's very generous. So some of the workers are choosing to remain unemployed. So that's kind of a moral hazard problem. But we'll talk about that later. In India, I don't know the numbers, but in the US, 80% of the people unemployed are on temporary unemployment. So assumption is they'll be able to resume their work after a somewhat rapid recovery. But here it assumes that we're not having a second set of spikes. We are not having a second set of huge spikes, or we are not having a lockdown or shutdown. So if that happens, then the U-shaped recovery would be more like and this is just to give an example, that this looks at some states in the US. So this is the United States economic activity, which measures, people going out, watching movies, transit, work, and it's from The Economist. And it shows how the economic activity, the black line shows the United States in general, and the other lines shows states who have decided to open up earlier than the whole country. So for example, I'm in Ohio. They have delayed the open, so it's open now, but I'm saying we were in social distancing. It's not a lockdown. We were in social distancing advisory for a longer period than, say, Georgia or Texas or Tennessee. But we have seen that the economic activity, though the social distancing was lifted, hasn't really come up. It's still about 20% or 25% below what it was. When you shut down the economy, you shut down the economy. So the GDP will drop. You see the composition, consumption, investment, government spending. The consumption suffers the most. Then we have this, as I said, the W-shaped recovery, which is also called a sawtooth type. So you have lockdown, a sharp lockdown, then easing of social restrictions, social distancing, then you see a pickup, but then you have another spike, and then you have another series of lockdown, and then again kind of goes up, with, so the economy moves with hiccups. And this will take some time to get back to the pre-COVID normal, maybe sometime next year, April, May. So that's the W-shaped recovery. And the worst case scenario, and that's everybody is trying to avoid, and we are trying all economies in the world are trying their best to prevent that from happening, is the dreaded L-shaped recovery. It's not that it will never recover, but it will take a long, long time, maybe not in 2022, sometime in 2023 or 24. So it's like an L-shaped recovery where this pandemic created a permanent shock on GDP. So there's lost investments during crisis, those lost global chains, a permanent change in the fiscal policy, reduction in global trade, travel, slowdown in productivity growth. That's going to take a long time to get back into the trajectory. So what are the things governments can do to aid in the recovery or prevent the economy from crashing, right? So there are a few things which they need to address, right? One is they have to, so unless the people come out and spend, the economy would not recover. But the people's ability and willing to spend depends on so many things. If there are social security nets, if they have an idea, well, if the economy improves, our jobs will be there, or there is some way the government could aid them, maybe direct intervention, sending them money, where they should be able to ride this period. That would actually increase their propensity to spend and get back to the economy and keep the economy running. Same with state and local government finances. It's true in US and India, this COVID damage will create problem to state and local governments, and we can see that. And in West Bengal, it was not just the COVID, but we had the Amphan, right? The Amphan. I don't know if I'm pronouncing it correctly, but has done severe damage to the state finances. And as income and sales drop, the GST revenues drop, these governments will have to cut spending, mostly by cutting employment or raising taxes or buying or delaying necessary expenditures. So there has to be some way where state governments should be kept running by infusion of funds from the central government or from the RBI. The other problem is because of this uncertainty, the credit markets where corporations, small businesses, corporations can borrow, that freezes up. Companies which want to borrow to pay salaries to its employees or to start something new or just continuing with the day-to-day operations, how much is permissible, they can't raise money if there is no money in the system. So there should be a way that you should ensure enough liquidity so that companies who want to borrow can borrow. So let's see, what are the tools or munitions available at the disposal of a country to tackle these? So this is a survey I've picked from, I think, Daily Mint. And this looks at this was a survey by the CII where they were surveying the companies. So about 65% of the companies say that they expect revenues to fall by over 40% in the second quarter. And 33% expect the revenues to fall by over 40% in the fiscal 21. So this was done on May 1st. I don't know whether this has changed since then, but these numbers kind of resonate with the US. Maybe US is slightly more optimistic, but this is what the business feels right now. So expectation of normalcy to return in the economy will take more than a year. That's about majority of the people think that. There are expectations of job losses, and recovery of domestic demand will take between 6 to 12 months. Okay. So what does a government and the Federal Reserve or the central bank, the RBI, can do? So there are two tools, and if you have studied economics, you know that these tools are monetary policy and fiscal policy. So I'll talk about the tools and what the US has done and what India has done. I don't have a lot of idea of what India has done on it. Of course, there have been series of stimulus packages which have been sent. One was March 26th, another was May 12th. But I will address, and some of the stuff which Federal Reserve has done, RBI has done too. So what does monetary policy do? It controls money supply. It determines, or it can manipulate short-term interest rates, especially interest rates which the banks pay on its deposits, and also interest rates which the bank. And so, on virtue of that, the interest rates the banks would charge businesses or individuals if they borrow money. It ensures liquidity in the system, and that comes with the money supply too. It can do recapitalization. So the banks are suffering. It can do recapitalization, and it can act as a lender of last resort. So I'll tell you what Federal Reserve has done. So Federal Reserve, what it did was completely unprecedented. Well, they took a lot of unprecedented measures in the last crisis, which was in 2008 and 2009, but this time they went even farther. For example, the Federal Reserve cut its federal funds rate, which is like the call money rate in India. That is the rate that banks pay to borrow from each other. They reduced it between 0 and 25%, 0.25%, so 0 to 25 basis points. They increased liquidity in the market tremendously. They purchased government debt and a lot of securities, mortgage-backed securities, we call it, so that the market functions smoothly. They also did something else. They to create a market for corporate debt, or to ensure that there is enough liquidity where the banks, when they want to, if the companies want to borrow money from the bond market, they don't have to pay very high interest rates because it's demand and supply. If there are not enough buyers of the bonds, you have to pay a higher interest rate in order to induce a buyer. So in that case, what Fed does, it actually went and became a buyer of investment grade bonds. So that was a huge boost. So companies were not afraid about a liquidity crunch. They knew if they wanted to borrow money, even that intent that, well, the money is there, if we need it, we should be able to borrow it, that actually helped a lot. They also did a few other things. They offered loans to other financial institutions, not just banks. They offered loans to NBFCs. And I think that's what the RBI is also doing. So RBI is also taking a lot of the steps which Federal Reserve is taking, and they're going through a different route. They're going to the repo operations. The RBI, that's the way they usually operate in India. But I think the message by Sitaraman was that they were doing all they could do to provide a good amount of liquidity in the system. And also, the Fed is temporarily relaxing regulatory environments. One difference between the US banking system and the Indian banking system was US banking system after the 2008-2009 crisis had improved a lot. So they are already well capitalized. They have been heavily monitored by the Federal Reserve. They had to maintain strict capital requirements. They were doing regular stress tests. But India, the financial system in India, as we entered this crisis, was not the best. The banks were going through problems. We had cases of huge amount of non-performing assets and stuff. So that's one of the major differences we feel, and that kind of hinders the ability of Indian banks to go out and lend money. The US banks also are granted in some way that, well, if you're lending money to small businesses, you'd be, if there is a non-repayment, there's a way you should be able to manage the reserves. And in fact, their Federal Reserve temporarily relaxed regulatory requirements. So they have actually allowed the banks to dip into the regulatory capital and liquidity buffers so they can increase lending during the downturn. I don't know how much it is done in India, and you might be able to educate me on that, but that's extremely important. The availability of credit, the amount of liquidity, and also the fact that they are the lender of last resort. If there is anything happens, our windows open, you should be able to borrow. So they have gone beyond just the banks. They're allowing other companies, and even they're giving direct lending to state and municipal governments. So, for example, if Ohio wants to raise money, uh, those bonds are bought by the Federal Reserve. Okay, so I don't know whether RBI is doing that, but that's another avenue. Um, so, what does fiscal policy? What does governments can do? They can do many things. I mean, they can do, and again, these are the ammunition. And one problem with Federal Reserve or money supply, sorry, Federal Reserve and RBI, the monetary policy is, the problem here is not just a demand problem, it's also a supply problem. There is a supply bottlenecks, right? So, and a lot of the supply is from the global supply chains, which are also have problems. So, a lowering of interest rates can only help so far, unless you're going out of home. You know, you can't buy a new house or a new car, right? And if you're already concerned about what will happen to my job, what will happen to the economy, you're already concerned. So, do these things help? And it would help to maybe pay your bills. It's not directly help you to spur demand. So what does the government do? What can the government do? And the government can actually do many things. I mean, of course, they will try their best so that you can revive the economy with the least amount of damage. So you can do a tax cuts. In US, we didn't see a direct tax cut, because we had a huge amount of tax cut about 2 years back. So we are still continuing to have that low rate of tax in the US economy. To increase unemployment benefits. So US is, so the difference between US and India is, in the US, the organized sector is huge. Most of the business sectors is organized. In India, unorganized sector accounts for a large proportion of the business, right? And we have the Aadhaar thing. In US, we have the IRS monitors taxes. So even if you are not making any money, or not making, if you are earning money but not making any profits in a business, or if you're earning money but then you're below the tax, slab, you still have to submit your tax form. So it's easier in the US to actually give unemployment benefits and actually give direct aid. So what the US government did was, in March, they announced a stimulus package of $1,200 to about 95% of the households. So basically, households which make less than $200,000 a year. So that's $1,200 per person, per adult person. So for example, a family of 4 people will get, like if there are 2 adults, 1,200 times 2, that's 2,400. And for child below 18, it's $500. So a family of 4 would get $3,400 in direct aid. And it'll be a check will be made to them. But for many cases, like for me, for example, I'll just see it in my bank account, the account I use to pay or receive tax benefits. Unemployment benefits in US, and I think they went. So was it good? I mean, I would say they could have done it more targeted. So they could have only given it to sectors or people who suffered the most. It was extremely expensive. The size of this direct aid was about $2.1 trillion. That's about 90% of the Indian GDP. That's huge. The unemployment benefits have been very generous. And in fact, they say 68% of the people who are availing this unemployment benefits actually receiving more money in unemployment benefits than they were when they were working. So they're getting $600 a week in unemployment benefits. That $2,400 a month. That's a lot of money for many people. So in fact, I have had stories where people are just unwilling to go back to work because they're making more money sitting at home, remaining unemployed. There is a paycheck protection which protects small businesses. You know, if the small business is suffering, especially areas, a lot of small businesses are losing income because there is no consumption, no people not buying, or the service industry has suffered. The paycheck protection actually protects up to about $10 million in some cases.
a lot of the universities also got this aid. So, the universities in the US have suffered because most universities in the US are residential. So if people cannot stay in residential halls, if students cannot stay in residential halls, they have to go back to their home or home state. And all universities have to refund that amount. Food and residential fees are actually pretty big chunk of a company of a university's revenue. So the government actually came into assistance of these universities. There are targeted sector helps. For example, the airline sector, the cruise sector, some of the automotive sector, they have suffered huge losses. The airline sector, some point of time, were running at 10% of their capacity. It was almost virtually zero. Nobody was traveling. Very few people were traveling in April. Now, unlike India, in the US, the planes were open. The domestic travel never stopped. The international travel was open too, but of course there were less flights, but the domestic flights never stopped. But still with that case, even if it was open, they were running way below capacity. So the US government actually extended aid to some of the largest airlines. I think most airlines got that aid, and one of the conditions for the aid was, of course, the aid comes with conditions, right? It's not free money. With the condition that they cannot fire their employees, or they have to maintain their employees for the next 6 months or something. And of course, there were loans and which are offered to small businesses, mid-sized businesses, and in many cases, some of the loans are forgivable. So if you can make a point that you haven't been able to come out of your, of the problems you're facing, that loans can be forgivable. So US has done a lot in that sense. So and it wouldn't have to if it had started the lockdown or social distancing a week or two before. It's costing us a lot amount of money. So they're costing us about the fiscal policy itself is costing us about 10% of the GDP, which is about, it's at 21 trillion, it's about 2.1 trillion, or a little bit more than that. But to have that in perspective, is India spending enough? US has 106% of its, the US debt, the government debt is 106% of the GDP. In India, the debt is about 68% of GDP, but there is room to grow. So I think for India, the debt package, the stimulus package is not done yet. So there will be another series of package coming if the economy doesn't improve. I'm pretty sure about that. So who were the losing sectors? And one of the reasons I put this up is that these are the sectors that the aid has to be targeted, because some of the jobs which are lost in these sectors are not going to come back. So for example, restaurants. The restaurants are open, but they're still it's sparsely populated. And for example, a restaurant had 100 seats. Now they're opening, but they have removed 2/3 of the seats because of social distancing. So that means if they're working with 1/3 of the capacity, they don't need 1/3 of the workers, 2/3 of the workers, right? So some of those employment lost would be there, and some of the people who were losing their jobs might be moving into areas where there are more jobs available. And I'll talk about that when I go to the winners. So auto industry is a big loser. People have stopped buying cars. One of the largest auto rental companies in the world, Hertz, they actually declared bankruptcy this week. Airlines are in a mess. Even Boeing is having problems. The construction and real estate has suffered. If you can't do house shows and stuff, you can't really sell houses. The commercial real estate has suffered a lot in the US because, and I have friends where companies have decided they are going to let up their leases or their rents because they think, well, this work from home, and in the US, a lot of the industry is service industry, and they see that work from home is actually working well. So some of these companies are not coming back, in the sense they're coming back, but they're giving extra money to the workers to work from home, to set up a home office, but they're not going back to the commercial real estate. So financial services, of course, has suffered, but there are winners there too. The oil and gas has suffered because of the decline in demand for gas and oil, for oil mostly. And plus there were squabbles between Saudi Arabia and Russia, which actually helped that. Then in India, you have street hawkers, vendors, and unless there is a way where the government can actually help them, targeted help, I mean, that sector would be hurt immensely. Movie theaters, advertising, dry cleaners, sports, education, departmental stores, and live entertainment, travel agency, travel companies, they have suffered a lot. These are the losers. And even in the thing, and it will take a while for these to pick up. And there are some areas, and because of people's mindset would change, maybe there are some areas which would have a permanent change. Maybe in some case, education, and restaurants, and commercial real estate. So who have been the winners? So the winners are also many, and some of the displacement in work, like so waiters in restaurants, if they're laid off, where they can find work. I mean, if they're healthy, they can find work in delivery services. Delivery services have boomed in the US like anything. And I think it has done so in India. So food delivery services from groceries. So there's a company called Instacart, which has hired about 550,000 people during this crisis in the US. Amazon is everywhere. They're doing great. And people who have never been Amazon Prime member, there have been more Amazon Prime member joining in this short period than they have joined before. The grocery stores are doing well. People have to eat, right? The video conferencing companies are doing well. The OTT platforms are doing well. Agriculture is doing fine. The healthcare, medical supply and services are doing well. E-commerce is now more integrated. I think in India, that's a change which demonetization couldn't do. I think this is going to do it even farther. The e-payment systems have increased. So these are the areas where we are actually having some winners. So medium-term changes, depending on what kind of recovery we have, and this is kind of based on U-shaped or the W-shaped, international trade will suffer. We are already seeing that. The global supply chains will be disrupted. So there's a topic that companies are moving out their businesses from, or their factories got contracts from China. Some of it is true. What they're doing is they're diversifying. So for example, previously, say China produced 100% of a good, like maybe phones, right? But they've seen like what happens if the Chinese companies, the Chinese economy shut down, the factories shut down. So now they're doing is they're having a Chinese company and having that factory there where they're running it at 60% capacity or 50% capacity, and having a company or a factory in India or Vietnam or in Mexico where they're having a factory and running it to a capacity. So in that case, if there's a problem in one part of the world, then the other part, geographically distant part, would be still working. So that's something you'd see. And I have seen that there has been a backlash against China, which I think will remain for a while. And by the virtue of that China is the world's one of the largest trade partners, I think the international trade will suffer. And I'm seeing that in US, where our government is cracking down on trade, and they're imposing tariffs, which should be the opposite thing to do right now. You should actually reduce tariffs, right? But they're doing that, so that will suffer. So deglobalization, would be some kind of deglobalization in the medium to long term. Some jobs and businesses will be permanently lost, which I mentioned when I talked about losers. World will be more digitally connected, and the e-commerce will have exponential growth, which we are seeing, especially in India. So that's kind of the end to my presentation. And as I said, I like to make it more interactive. So I'll take questions now. And again, this will be my opinions. In no way it would be opinions which, I mean, it is what I think. It's my opinion. Anything you ask, any reply you receive.
Professor Roychoudhury, I have one question to ask. That basically the problem that we are facing, that is effective demand-related problem. So, is it a justified path the countries have taken, the governments have taken to address the problem with the monetary policy?
So one problem is you can't really, I mean, unless this, even if, say for example, even if the cases dip, okay, we have flattened the curve, even the cases dip, people will be reluctant to go out and spend, go out freely. In fact, there was a study in China, like last week, where they have gone back to almost normal. It's almost normal, but they're going back to the life where, like for example, they were looking at the economic activity in Beijing area over a space of a week, and they found that economic activity are almost back to the pre-COVID levels during the weekdays. So people are traveling, they're eating at the restaurants, so they're almost back. But in the weekends, that dropped sharply. So any leisure or discretionary spending, they're kind of shunning. They're afraid. They're still afraid of this disease. So you can't really change effective demand that way with a fiscal and monetary policy. So you're right with that. Monetary policy can maybe assuage your fears to some extent well, and maybe help you if the company runs out of money or is having hardships. But effective demand maybe has to do with confidence. Unless you can get that confidence back
Exactly.
to the individual, I think the economy would not run at full capacity. It would run at 80%, 90% capacity. Now it depends. We have seen in the US, surprisingly, that it seems to be, and I've seen that, though, they still say 80% of people are still afraid, but about 20% people are going out. I can see people jogging in the street. I can see a lot of traffic. I can see the departmental stores now kind of packed in the weekend. So it depends. But unless there is a good news about a therapeutic drug or a vaccine, people would continue to not spend money.
Exactly.
Yeah, that's a good question. Thank you. Yeah. And that's a question for the epidemiologist or the life sciences. So I have very little idea about the virus. And I think they also have very little idea about the virus.
Actually, in our country, RBI is continuously decreasing the rate of interest, and practically now it is the real rate of interest is negative.
Okay.
And I don't know that the marginal efficiency of investment theory, what it tells that, but what we have learned in books and now what is happening. So if interest rate is still low, the investment will increase. Do you think that already there is unwanted inventory accumulation in lots of businesses? So will it really increase the investment?
I think what RBI wanted to do is to ensure liquidity in the system. So that's the primary objective, increasing. So if a company wants to borrow, from the bank has enough liquidity, they're enough capitalized, they have enough liquidity to borrow. So it's like a band-aid approach. But the secondary effect is maybe it will instill trust that, well, okay, I have a lender of last resort, so I can actually go and invest. I can actually hire workers. So it's not directly supporting investment and demand, but it's just increasing confidence and allowing companies to, keep their workers, pay their bills, and so on. So, the monetary policy can only do so much. But here, the thing they're doing is to ensure that there is enough liquidity available. So, if companies are going to borrow, they should have access to that. Now, do you think it's success, the amount of money which the government is spending on aid? No, I think it's very necessary. You don't think about, if your house is on fire, you don't think about your water bill, right? I mean, you will have to take all necessary actions possible and ride this out. there will be a better day, right? But currently, I think, I don't know. I mean, as I said, in my opinion, we haven't seen the last of stimulus from the US as well as India. US has done a tremendous amount of stimulus, and they're talking about more stimulus. India has done, but I think there is still ways where the government can extend stimulus.
If I can say something.
Yes, go ahead, Shubhodip.
Yeah, hi, Saurav. Madam, just continuing with your point of view, what you were saying was that you were a little bit critical of the policy of RBI at this point of time. So on 2 points, firstly, that RBI was having a more supply-oriented approach, not a demand-oriented approach, which I agree with you 100%. And secondly, that RBI is reducing rates to a negative real rate of interest, which is also true. But the point is, if you look at it from the point of view of the government or the RBI, what other option do you have? Can you generate demand so fast? Can you make it a demand-oriented recovery at this point of time? Can you increase liquidity by any other way other than the macroeconomic measures that they are taking right now, which is temporarily correct? The first step is going the repo rate cut way. So what they are trying to do is basically they're just what, like Saurav said, and I agree with him also, that firstly, if your house is on fire, you do not look at the water bill right now. So, madam, probably the explanation for your theory, and you are correct in your way, is that right now the RBI is taking some stopgap measures to immediately diffuse the fire, and afterwards maybe they will have to take some longer term measures in order to make things better.
Yeah, I think what RBI is doing, and so our government, I think they're doing all that's possible. And in fact, I mean, some are hits and some are misses, but I think both, and countries around the world, the central banks around the world, they're doing very similar things, and RBI is not an exception. The banking sector in India is different from the banking sector in US, but I think the arsenal RBI has, they're using it to their best.
Basically, that is the only option they have right now. They don't. I don't know whether you can suggest something else or anybody else can.
I mean, the one thing they haven't done directly is the transmission mechanism which RBI does is through the banks, right? So I don't know whether. So, for example, in the US, what Federal Reserve is doing is they're buying bonds from state governments. Okay, so they're basically monetizing the state government debt that way. They're buying, so I don't know whether RBI is buying, say, West Bengal, if West Bengal government wants to raise money, can they issue a bond which RBI can buy? I don't know if they have done that. Again, I'm not educated that much on the US, on the Indian, like, what steps India did. I have an overview, but I don't know whether they were doing that. But also there are ways where RBI can directly borrow, buy debt from companies which are financially healthy, so that those collateral those are pretty good collateral. And when the economy recovers, RBI would not be losing money in that way. But so I don't know. I have to read a little bit more on that. But I think what RBI has done is what most central banks are doing. They're not doing.
State governments borrowing money from the central bank is probably not a mechanism which is prevalent in India as of now. Otherwise, there would have been a lot of discussion on this, and we would have been able to see this. Buying bonds or lending bonds by RBI between RBI and state governments is a mechanism which is still not widespread as in US. It's much more widespread here.
In the US, it's not widespread. It's in fact, some of these measures which Fed took were not even taken in 2008, 2009. So I'm not sure whether. So the way they buy those, they're called municipal bonds or munis in US. So what basically Federal Reserve is doing is they're lending direct to the state governments and local governments through the municipal liquidity facilities. So it's an indirect way where Federal Reserve can actually sell those bonds. The bond market is way developed in the US. So instead of just bank loans, I think it's easier to transfer ownership in a bond. You can just sell. It's difficult to sell a loan to another company, but it's easier to sell a bond to another company. So maybe because a lot of the debt instruments are in the form of bonds, it's easier in the US to do that. Maybe it's not that easy in India, where the bond market is still very undeveloped.
And also is much smaller. US bond market is much larger. Yeah.
Here in Indian market is RBI is also doing the traditional treasury bills buying and selling, and ultimately it comes down to actually printing of money. That is the way the deficit financing majorly is now being done here.
I don't know whether RBI they're monetizing the debt explicitly. I don't know about that. But that's kind of a last resort, which I think our government would employ. They would ask RBI to lend them money. They have done it before, right? In 2 years back, I think there was. The RBI extended a huge amount of.
They reserve the extended.
Yeah, so there might be. That's kind of I think the last resort for our government to monetize the debt. Ask RBI to monetize the debt, but we are not yet there. And one of the advantages US had is its dollars, right? Dollar is still the world's reserve currency. It's more than half of the cross-border interbank claims, the trade is in dollars. So people still, if I'm traveling, so if I'm visiting a country, I get that country's currency, and I carry dollars. If I run out of the country's currency, I can actually use dollars. That happened to me many times. So I think US is lucky in that sense. Everyone rushes to buy dollars when there is a crisis. It was in the subprime crash was caused by the US, but the Wall Street
caused it. But people all over the world, the banks all over the world rush to buy dollars. And because it's a flight to safety, a demand for treasury bonds and dollars increases the value of dollars, reduces the yields or interest rates. So US actually gains in both ways. For India, which is a small economy, though not by number of people, but by the size, it can't afford to print money like crazy. It can, though it has a debt to GDP ratio much less than the US. There will be capital flight. There will be a huge devaluation of rupee. But that will come. That might come ultimately. I don't know. But I think the central government and the RBI are holding on to that last tool in their ammunition. And again, there are so many unknowns, and unless there is a vaccine developed, and again, the vaccines are about 60% effective, 50 to 60% effective. A general flu vaccine, influenza vaccine is also 60% effective. Now, of course, it can reduce the amount of reduce the recovery period, so that might help. But still, unless there is a vaccine out, it seems that this thing is not going to disappear that easily. So we will continue to have this spurt, opening, lockdown for a while. So it could be a U-shaped or a W-shaped. So, but not a smooth recovery, unfortunately. So I have a question from Anushka, right? So which sector of the economies are likely to recover the fastest, and which one are likely to recover the slowest? Tourism probably would recover the slowest. People will, so it's things which, the sectors of the economy which are likely to recover the fastest are the non-discretionary spending sectors, where you have to buy those stuff, right? You have to, it's a grocery, shopping, things which are needed for your life, but things which are non-discretionary, like a iPhone, buying iPhone or traveling to place for leisure, those things will be the, so the auto industry again will be slowest to recover. It's interesting, and we and in our convention in economics, when we studied, we said, well, if the government is spending money like crazy, and if the central bank is doing a helicopter drop, that is printing money, it seems that the prices will rise in the future. And it has happened in US in 2008, 2009, but we haven't really seen an increase in price. There are many reasons for it. One is, of course, the demand issue, and also maybe because of international trade, a lot of things we import have kept the price cheaper. Though the international trade is a small part of the Indian GDP, it still has some effect. So theory says it will, but currently you have to do that. And what's the option? Not spend, not do any stimulus, not protect people, the most vulnerable population. It'll be a humanitarian crisis. I think now the time is not to think about these things, but to see how fast and how quickly we can have the economy up and running. If you shut down the economy, you shut down the economy. So it can't go on forever. And those humanitarian costs, if you weigh the humanitarian cost with future inflation costs, humanitarian costs would outweigh the future inflation costs. So I think there is no option. We'll think about inflation later. Yeah, and I think I mentioned about which section of the business will be most affected by the pandemic in the years to come. The auto industry, I think, would be affected. The travel industry, the airline to some extent. In the US, I can say the cruise industry. One of the reasons is the cruise industry is pretty big in the US. And the demographics of the cruise is population 60 years and older, who'd be very reluctant to go on a cruise, even if things get back to much normal. But okay, do the environmental benefits seen as a result of this global slowdown is like less pollution, clean rivers, hint that potential positive impacts of a Green New Deal? That's an interesting question. I've been forwarded WhatsApp messages from places like Delhi where they can actually see far, much clearer. And a friend from Chandigarh, he sent me photos of the mountains or somewhere. Was it Chandigarh or Ludhiana? I don't know. But I don't know. It's positive. That's probably one of the silver linings from this crisis. But I don't know how will it affect the Green New Deal. But that was a good question. If anybody wants to chime in with that, please feel free to. I would also like to hear their perspective about it. Or Anushka, if you have any perspective, let me know. And in the US, they are not very concerned about this, it seems. They think this pollution is a European and a third world problem. I don't agree with that, of course. We should all take responsibility, but the current president seems not to be very fond of this. Okay, any other questions? If there is none, thank you again for inviting me. It's a pleasure. I've been to iLEAD. Every time I come to India, I visit iLEAD either to meet Mr. Chopra or my friends there like Shubhodip and meet with Debashish and all. I like the campus, very nice, a compact campus. And hopefully next year I'd be able to come again to iLEAD and maybe deliver a lecture. Hopefully it was helpful. I haven't talked anything beyond what you can get from maybe papers and stuff, but it was my perspective, kind of trying to break down the real problems we have and hopes for recovery. Okay, thank you, and have a good night and a great weekend.
Bye.